All right. Let me make sure. Okay. Good morning. Good afternoon. Good afternoon, Ramesh ji. Andrew, I wasn't speaking earlier. Are you able to hear me now? All right. Cool. Cool.
Yes. Thank you. Can you hear me?
Yeah, I can hear you loud and clear.
Excellent. Thank you, Vivek.
All right. Okay. So we'll get started in a minute or two. Let me see. Who else do we have? Yeah, I took a break last week. As you guys know, I was busy in some other, family stuff. So good to be back. It's been, I miss these Saturday meetings. So good to be back on schedule and talk about markets. What did you guys do previous Saturday? You had whatever, 2 weeks or sorry, 2 or 2.5 hours to kill. You didn't have to come and listen to me. So anything new stuff you did last Saturday? Any fun stuff? Okay. Alrighty. So while I was gone, what did you guys do to the market, man? It was all okay. And we had a lot of volatile market. She says you made the market go down with your absence. See, it was good for my health because I was busy last week. So not this, not this one, but the previous one. So I am not sure. Very good for the portfolio though, but that's fine. But I didn't have too much time to focus on the markets. But it's all good. It's all good. Enjoy the roller coaster ride. Yeah, I mean that's what. If we want to get whatever 25%, we have to deal with the 5%, 10% drawdowns, right? The markets never go up in a straight line. It's always going to and enjoy the ride. Enjoy the ride. If you cannot stomach this roller coaster, come on. There are fixed. There is a good return even in the fixed income instruments, right? So you can get 4.5% risk free, and don't have to go through this volatility. People wouldn't want to have 4.5%, but now if you look at what the markets have done, uh, right now 4.5% looks to be pretty good, right?
Mm-hmm.
S&P 500 is down what 3 or 4%. We'll look at the charts. So 4.5% in treasuries sounds pretty good. So, but yeah, but if you're looking to the, I think the challenge in investing is you don't know which year 4.5% is good and which year you want to be invested in equities. So I'll stay invested in equities. So that's for me. What else? What else we want to talk about? So today, yeah, definitely gonna look at the markets, see what's happening in the markets. I got some interesting charts to look at. Do we have Sridhar? I know in a previous meeting, Sridhar had asked for Duolingo. So one agenda that I had on for today was to maybe discuss on Duolingo. But if Sridhar doesn't join by the time we get to Duolingo, I'll skip that. He was to bring the story around Duolingo, and I will bring up the numbers. I don't own the stock. I'm not. I think I downloaded Duolingo app maybe 2 years ago. Beyond that, I don't have much insight into Duolingo. But let's see if Sridhar joins. We'll go through that. What else? We'll look into a little bit of a crypto. What's happening on the crypto side? Yeah, that's pretty much it. Hopefully, try to finish in 2 hours. Wherever we are after 2 hours, we'll stop there, answer some questions. I'll hang around for 10-15 minutes, and we'll pick it up next week. Yeah. Andrew is saying, interesting that the value of many shares, including tech stocks, haven't gone up to the level they were at before the last big drop. Yeah, I don't.
Mm-hmm.
So, Andrew, what's your thesis of why are you expecting it to go up right now? I mean, I'm not expect. I don't know if these all will go up. Like we had a sharpest drop, fifth sharpest drop of 5%. in S&P 500 over the last 75 years. That's so the drop is pretty sharp. I mean, we can't,
Yes.
but I'm not sure if we're gonna get every time we're gonna get a V-shaped recovery. Over the last 2-3 years, every dip has been brought, and that has conditioned us to think, oh gosh, maybe we should get a V-shaped recovery. I don't know whether we're gonna get a V-shaped recovery uh, again or not. So this was our yen carry trade that blew up, and we had an immediate V-shaped recovery, right? Um, this was an April of I forgot what had happened in April. So one drop. I mean, I don't recall on this is I think 2024. Maybe it's some inflation numbers, and then it got bought up.
That's in a clear trouble show.
So
So over time,
okay, I
that's how
need
that's
to
a yen.
mute someone
I
who's
think he.
okay. I need to mute Stefan. Yeah, please stay in mute if you are discussing something other than this meeting, right? So yeah, this is the sharpest drop. Look at the slope of the curve. I think let's go beyond, maybe go to 5 years. Where did we see such drop? Maybe during COVID. COVID in 3 weeks, we were down what 35%, right? So this would have been the COVID. But now if you look back on the COVID side, you know, I'm sure when we were actually in this during the COVID February, March, it was painful, right? You can read about it, but even if you read about, let's say, previous crashes, dot-com crash, or go back to 70s crash, we just can't. It's when you're experiencing going through it, life is very, very different, right? The most recent one, at least I've gone through, is the COVID crash. Now we can sit back and say, oh, come on, this doesn't even register, right? This blip doesn't even register. Let's go. Let's see if I can extend it to 10 year. All right. So this was the COVID one. I think this is the second steepest drop since COVID. Now we'll talk about, hey, we were down at COVID here, and now we are like already almost more than twice since then. In hindsight, looks great, but while you were going through this, yeah, it was a little painful. It was a little painful, and I think now we are going through what the correction. I don't know why we call it a correction, but on Thursday, the overall market was in correction. That means it was less than down. It has a drawdown of 10% from its recent all-time high. That is called correction. Who coined the term correction for 10% drawdown? That means going up is a mistake. So have we corrected that? I hate the word correction to indicate when the market goes down, but it is the word that's being thrown around. So I will use it, but I don't, So then the opposite should be true, that when market is going high, you should call it as a mistake. No one calls that as a mistake. Anyway, so that's yeah. I mean, it's a quite steep drop. Like Nick is saying, we wiped out 6 months of gains in 2 weeks. Yeah, isn't there a saying? Market takes
Yeah.
escalator going up and elevator coming down. So that's what happened. But it's I think I do have a table which shows 5%, 10% drops are pretty common in the.
So, Vivek, hello, can you hear me?
Yeah, I can.
Hi, this is Sue. So my question is, do you think that this is a temporary drop and that due to the or do you think that it will come back soon?
See that the drop. So the drop has been because of the tariff concerns.
Yes.
Right? So till now, I think the whole market was prior to, let's say, 3 weeks. Earlier, market was all discussing, hey, it's just a negotiating tactic, right? Administration is not gonna do that. Right?
Mhm.
So eventually they will come around. They're not gonna impose the tariffs. But now market has realized that maybe Trump is gonna do what he said he's gonna do, right? Only one, only I think in the market among all the players, only one player that haven't changed from what they told, like say 6 months ago or a year ago, is the Republican Party, right? That's exactly what Trump told, and the administration was told that that's what exactly what they're gonna do,
Mm.
and that's what they're doing. Market has changed its own thesis behind. Oh no, he's not really not gonna do it. Trump, and even I'm of opinion that at the end of the day, Trump and the Republican administration consider stock market as their barometer of success. They're not going to crash the stock market, right? In
Mm-hmm.
long term. What's going to happen in next 6 months? Who knows? And now the market has started to pricing in the fact that I think the administration is okay with the pain in the stock market as long as it can bring down the 10-year interest rate. The
Mm.
focus of the administration is to bring down the 10-year notes interest rate. And if that means for a short term, the stock market goes down, so be it. I mean, we heard Scott Bessent coming talking about saying market needs to get off the detox, right? It's a detox period for the market.
Mm.
And if that's the case, maybe it's fine. Trump has
Mm.
come and talked about, I'm not ruling out the possibility of recession, right? So when the highest level people
Mm.
talk about these things, Howard Lutnick, Commerce Secretary, he has told, this is we're going to reset the whole financial system and how the world treats US. And if that means a little bit of a pain, so be it. It's
Mm.
good for the long term for America. And it means when you have to go through the detox, you have to feel the pain. Fine. Now no one knows. I don't think even the closest people among the administration may know that what's Trump gonna do tomorrow. We have seen so much of a seesaw, right? We're gonna impose a tariff. Oh no, we're not gonna take the tariff on the cars. Let's exclude the cars from it. Or then, oh no, let's defer all the tariffs till April. And then, oh no, we're gonna impose now new tariff on EU because they started a new import duty on bourbon, so we're gonna put 200% tariff on their wine. We don't even know tomorrow what Trump might say.
Yes.
So the
Yes.
market
Very
is not,
volatile.
yeah, and the last thing that market wants is indecisiveness and not knowing what's gonna do. You're gonna impose tariff? Okay, tell me that you're gonna impose tariff and stick to it. Market will figure out. Companies will figure out what they're gonna do.
Mm.
I think all these concerns are coming from company CEOs don't know which side should they pivot to. If you're going to keep flip-flopping between yes tariff, no tariff, tariff tomorrow, tariff deferred. Now we're going to talk about from April 2nd, we're going to have a reciprocal tariffs. You don't even know if it's going to happen or not happen, how many countries will come and negotiate. We have no idea. So I think this whole uncertainty, market doesn't like uncertainty. It's okay with the bad things as long as it's certain. Right? So I think we'll see. But again, I'm of an opinion. Good companies will survive through this. We have seen this time and again. Now the question is, the question you asked about, will this continue? I don't know. I don't think anyone knows. We can only talk about where we have been and probably opine on why we are in this situation today. Tomorrow, what's going to happen? No one knows. And I think I have one article around the whole analysts and the forecasters and how wrong they are. So I mean, it is exercise in futility to even try to forecast what's going to happen. Even if we are able to get the forecast right, for example, let's say I come and talk about it. I don't think he's going to do the tariff stuff, or maybe I'll say, hey, you know what? Donald Trump is going to implement the tariff like he did in first term, But how the market is going to react, we don't know. We might still get it wrong. So I'm not gonna opine on what's gonna happen tomorrow. All I'm gonna look at is what do I own in my portfolio? Are those the companies that are so fragile that if the tariffs come in, or the company that I own will be hugely impacted by the tariffs? I think I do have some chart around dividend companies, how to tariff proof your dividend companies. Yesterday I read an article, so I'll share that with you. If some of you are dividend income investors and want to look for the companies, but no one knows what's going to happen in future. I don't know if that's probably not an answer that you're looking for, but I want to be truthful and honest and say I want to be very clear that I don't have a crystal ball. And I don't think even those Wall Street firms who employ millions of dollars can do anything any better than what you and I can talk about future. Future is inherently uncertain.
Mhm.
And only
Yeah. So,
the only way we as an investor try to think about future is looking at the past and see what has happened in the past. But remember, the things that we remember in the past, in the history, are the things probably that have not happened before, right? So those are like very uncommon instances that define our history. We don't talk about markets, when the market goes sideways or continue to go, or market is not volatile. We don't even discuss those things when we talk about history. When we talk about history, we actually talk about the things that happens. These are like 5 delta, 10 delta standard deviation moves. COVID. Right? And then we say, okay, after COVID, this happened. This is how market reacted. Or Japanese yen trade that I just spoke about. And then looking at those events, which are rare, means you don't have enough sample data to project about the future. But as a human nature, we look at those historical events and try to figure out what might happen in future, right? So there is, and I know I'm guilty of doing it, but this is how the human nature is. Right? It's so funny that when we try to look at a history and try to project about a future, only thing that you remember in the history and gets in the historical records are the events that are rare events. Then how can I just build my future based on things that happen once in a while? Right? So anyway,
yeah. So I mean, are there companies that are more tariff proof than others?
we will look at some of those companies, but I think if you look at anything that is, let's say, auto
I
companies, etc., they are impacted by all the import duties. But if you're looking at the companies that have a lot of, let's say, tech companies,
Yeah.
they have a less exposure to tariffs, etc. So you need to look at how those, where those companies operate, how much do they import in terms of raw material, etc. Then determine, are they impacted by tariff or not. I'll have some company that I'll share, but yeah, it depends from individual companies to company. Sorry, someone was about to say
So
something.
I
yeah,
had one
it was
question.
me.
Oh, sorry.
Sorry.
But,
I just want to my name is Navjeet. This is my first meeting, so
okay.
I met you at Charles Schwab event, so
Oh, okay.
I've been wanting to come, and it just every time something comes up. So today I was able to join this group. Okay. Um, Given what's going on in the market, okay. The thing was, what's been down significantly are the ones that are richly valued. What's going on is because Trump is speaking of tariffs here, tariffs there, or today it's on, tomorrow, oh, it's postponed for this thing. What's happening is the consumer sentiment is going down, okay? Given that situation, they're holding on to the bucks they have. And already I right before this meeting, I was on the phone with my sister who lives in Canada. In Canada, it's like she has a business and everything, and she's seen like her sales are just dropping every week
Mhm.
ever since the tariffs situation has come up. So and then the other thing you have to understand is at the senior management, when they're thinking about revenue projections and allocating budgets, you know, if the companies are worried more about tariffs than what's their new product is going to be, like for example, GM or Ford, that's a really bad situation. Okay. If you are in those stocks, you have to decide whether you can take the pain or your cost of entry was so low that, hey, whatever's coming through as a dividend is good enough for me to ride out this roller coaster. Okay. Um, However, the thing is, it's all about staying in the market. Okay. Yes, you can be either left or right side of the trade. Okay. But the thing is, if you have a stock that's giving you a decent dividend, okay, and they're able to navigate through this tariff thing, then that's a great position to be. However, paying richly for companies like Nvidia and Tesla is its own beast, would be not the ideal situation right now. But if you got Nvidia and your cost base is less than $10, hey, you can ride it out, right? So yeah,
Yep. No,
that's it.
Oh, so yeah, thanks for that. Actually, I was gonna ask you about Amazon.
Okay.
So Amazon, generally is a very good company, excellent company with a lot of products, but right now it's taken a beating.
So Amazon is just like a Walmart, okay? But it's a digital Walmart, okay?
Mhm.
Right? So um they're the Amazon, the thing is they're like even though it's one company, like Walmart is just Walmart, okay? Yes, they can be the next hub for I'm not sure if everybody got to see that one article 2 weeks back in Wall Street Journal where they said that Walmart can leapfrog Amazon in the same day delivery
all
because
right,
they're able to.
sorry, I'll have to stop you right there. Don't kill.
Okay.
I have that article today to talk about.
Oh, okay, you do. Okay,
Yeah,
okay. All right, sorry. I just Okay, so basically Amazon, not only is in digital delivery, however, that the cyber uh, their storage is another business in itself. And then now because of advertisement, they're able to do that. And plus now they're going into the Prime with the video and live entertainment is another thing. It's a great
Mhm.
company. It's just, however, you cannot be in and out of the trade. I'm a buyer than a seller. Okay. Most
Mhm.
like my trades, if I do 10 trades, nine will be buys and there'll be only one. Because the one is because the position changed or the my thesis to get in
Hey,
that
so Vivek, you want to
stock.
go back to your presentation?
Okay, sorry. Sorry.
yeah,
Okay.
that's right. So,
Yeah. So I had a specific question on that to
Okay.
stock because I bought it at 225 and now it's down to like 197 or so, 198,
so,
198. And
so,
I'm just
yeah.
thinking, should I just hold or should I buy more? I
So,
don't
so
know.
I think, I don't think anyone can tell you what you need to do for your portfolio. But like Najit was saying, Amazon is a good company. If you were bought at 225, what was your thesis? Now it is available at a cheaper rate. Number two, at least in my investing career, what I have figured out is it's one thing which is very important when you're building your portfolio is your position sizing. Right?
Mhm.
You can figure out the best company in the world, but if you back up the truck on it, make it 20% of your portfolio, 30% of your portfolio, and you don't know what that might happen with that company. So keep your position size in check. And if
Mhm.
your thesis for which you bought Amazon, if that thesis is still true, I would say it is available at 10 or 15% cheaper than when you bought it.
Mhm.
Right.
All right.
Mhm.
Something.
So with that,
Vivek, Vivek, can I ask one question?
all right,
I
go
know
ahead.
I know you follow Buffett very closely, and
Mm-hmm.
he had a massive stock pile of cash, and I don't know if he still does, if he's buying now. But two questions: did he foresee what we're going through now? And two, is he buying, or can we know that he's
I
taking?
think he's so we'll only get to know if he bought or not when the next 13F come out. But at least we know that he is selling his retail, his brokerage, not brokerage, what called real estate broker firm. So Berkshire has, I think, and the Compass brokerage is buying Berkshire Hathaway real estate brokerage firm. So that gives you some hint on what he may be thinking. You can take it from there. But yes, they've been building a cash pile. And I think I talked about this earlier is for Berkshire to make a difference in terms of returns for investor, he need to find a big companies and at a price point where he feels comfortable buying it. There is nothing existing in the market. He doesn't, I mean, investing 10 billion, 15 billion, 20 billion dollars is not going to move needle for Berkshire Hathaway. He needs the companies wherein he can invest in $50 billion. Where are such companies that can consume $50 billion and at the price point at which Berkshire, Warren Buffett, or I don't even know if he's making still all the decisions or the Todd and Ted are making decisions. I guess probably it's the latter. But let's say Berkshire Hathaway actually, it meets the criteria of Berkshire Hathaway from a valuation perspective. So there are none. And I think Berkshire Hathaway has got a lot of patience. They're not thinking about tomorrow, next year, 5 years. All the investment, let's say Berkshire Energy is doing, only gonna provide any returns after 30 years. Right? They can wait. They are patient. They can wait. So, and sooner or later, we're gonna have the downturn. We're gonna have a bear market. I mean, markets never go up in a straight line. Is it going to happen this year, next year? I don't know. Right. But this whole, the fun that we have had with the AI is not going to continue forever.
Vivek, can I say something? The people who are asking the questions, they have not really made up their mind when they buy the stock. You need to make a decision when you buy the stock, whether it is something that you want to hold for a longer time. What are you planning to do when it goes down? What percentage you want to take a stop loss or when you take a profit. If you have that figured out, you don't need to ask anybody any of these questions. That's where I stand, and that's how I do my trades.
Yep. And for me, I mean, I only buy for long term. So very few are sort of called of a trade opportunities. But yeah. So that's so I don't know. So their stock, their cash pile was around what, $370 billion, Berkshire Hathaway's, and now with the sale of the real estate brokerage firm, it's probably going to increase unless there's a company which can, wherein he can invest 50-60 billion dollars, they'll be happy sitting in a cash. And why not? Now the cash is earning 4.5%. Or maybe he'll do preferreds, etc., and get 7%, 8%. So currently, the equity risk premium, if you look at S&P's, earnings yield and how much is the PE and all that, it's very low because the markets were high. Right? So do you want to play in an expensive market with an assumption that it's gonna get more expensive? Yeah, that's a trade you can do. Right? That's one way of playing in the market. I'm a growth investor. I know this company is expensive, but I know that it's gonna get more expensive tomorrow. That's the typical definition of a growth investor. Value investor looks at, I'm saying typical value investor. From my perspective, all investing is value investing. Even investing in Amazon is value investing. But if you talk of typical definition of value investor is the stock company is worth $100. Today it is selling at $80. Warren Buffett, Berkshire, has been traditionally a value investor. Of course, over the years they have changed. They invested in a companies that will grow their valuation also, but they're not gonna invest in a company which is trading at, let's say, 10 times sales or 15 times sales. So different investor, different viewpoint. I follow Berkshire, like you said, I follow Berkshire very closely. I have read all his annual reports since 1950s. Took me a few months. I think I've learned a lot, but at the end of the day, I have to decide what I want to do with my portfolio and not blindly follow anyone. All right, with that, let's get into today's session. I think we have got enough quorum as well. First of all, a disclaimer, anything that we discuss here is not a financial, tax, or investment advice. Don't follow anyone, don't follow me. Yeah, I'm gonna talk about stocks. I will be transparent in telling you what I buy or sell, but just don't go buy and sell because I bought it, right? You have to figure out what works for you. All right, so before we get into quick warm up, I was watching a series on I think it's on Amazon Prime, and which is about Wall Street hidens. So, which was the first electric car company to go public? Question: which is the first electric company in US to go public? Anyone? Okay, which one do you know of? All right, so I was surprised. GM, nope.
Tesla, probably, no?
No, this was Studebaker. The company doesn't even exist. It was somewhere in
Yes.
1905 or 1907, and they had $1,050. In fact, they had like 4 or 5 models of electric companies. And now I realize, way back, it's before Ford came up with its own assembly line and all that. There were many companies in US that were actually making electric vehicles, and then everything fell by the wayside. I don't know what happened, that we went back very heavy on ICE, and now we are getting back to electric one. So they had what, 4 touring cars, 6 touring cars, 6 London Roadster, 6 sedans, and then they also had fewer ICE models, but majority of them were electric models. So I don't know. I thought maybe the Tesla was the first one, but no, it happened in I think 1905 or something. Ramesh just said those who can't handle the market swing can invest in ETF and not in individual stock. Yeah, ETF are a little less volatile, but even SPY was down 10%. So when the proverbial dash hits the fan, all the correlations, everything goes to 1, everything goes down. Electric, yeah, Asif say you are right. Electric cars were invented before ICE. Andrew, when you say growth investing, well, how does a growth, even a value investor, factor in drops that wipes away gains? So how to balance stocks to contain those ups and downs? So there are ways to hedge your portfolio, right? If you really want, if this volatility is giving us sleepless nights, there are ways to hedge your portfolio, but then also means there is no free lunch. So if you're trying to hedge your portfolio, you also have an opportunity cost that in case market continues to go up, you're not going to make as much money as what you would have if you not hedged it. And if you are investing in stock market, or at least if I were invest in stock market, my minimum holding period would be 5 years, 10 years. Ideally, my holding period is infinite, right? And so I don't, if, market going down by 5%, 10% this year, it's okay because market does that. Look at the history of markets. They have done it many times. Just that over the last 15 years, we haven't had that drops because we have
110.
So you got to take a bus.
What?
Which bus? When the bus drivers pull up?
So All right, maybe I will see if I can mute. Okay, so now if you need to speak, sorry, I just unmuted. I muted everyone, and if you want to speak up, just raise your hand and I'll unmute you. Okay. We're getting a lot of background. So, where was I? I lost my chain of thoughts. Oh yeah, we were talking about market drawdowns, right? So that happens. It's only that last 15 years we've been spoiled by the liquidity in the markets, zero interest rates, and when the cost of capital is zero, so you can invest. Money will go to all the risky assets, whether they are producing any economic value or not. So we have seen companies at Nicola. We have seen companies with a business model only on paper napkins, doesn't make any real revenue, also coming to the stock market, and with the billions of dollars of valuation. Now the reality is setting in where you actually have a cost of capital, and we're trying to adjust to the new reality. So, but like I always hedge some portion of my portfolio. So last year I lost on the hedges because the market was up. So overall I gained, but I didn't gain as much I could have gained if I did not have hedges. This year, all those hedges are helping me in terms of, while I'm losing on my long portfolio because of the stocks are down, S&P 500 is down, but the hedges are minting money, so it has cushioned some of those losses, right? So you have to determine how much you want to hedge. If you're always 100% hedge, then you're never gonna make money, right? So there is no free lunch in the market. That's what I say. So, and how to balance stocks to come up and down? Yeah. So today I'll talk about SC. I think 2 weeks ago someone asked me why you're investing in SCHD. I'm not a big dividend income investor, but I hold SCHD. It's my top 5 portfolio. And my reason was that when markets are little jittery, markets are uncertain, markets are fearful, you will generally see money moving towards stable dividend paying companies. And that was my thesis, and that thesis has worked out over last 3 weeks. So you figure out to construct your portfolio to not have only everything as a group, every company as growth company, which is like if they only work if the markets are feeling gaga. And now, let's say when the markets are ripping up higher, SCHD will not perform. But I'm okay with that. I live with it. So it's you have to figure out how to construct your portfolio, what kind of a mix you want to have in your, the companies that you hold or ETFs that you hold. This year, European market has completely outperformed. I think the delta is almost 15%. I've not invested in European market. So I'm like, oh, dish, maybe I should have it. This year, Chinese market has outperformed. Right? So those who've been coming, and talking, attending these sessions, like, remember 2 years ago, China was uninvestable. The companies were available at a very cheap valuation. Nobody wanted to touch it. And I came and talked about it. Look at Alibaba's result. Look at the free cash flow yield, 17%. I've never seen in these great yields. But of course, it comes with a CCP rate. So start building your portfolio within the position sizing guidelines. So this year, yeah, Chinese companies part of my portfolio has helped to cushion some of these losses. So it's a lot about portfolio construction, how you build your portfolio. Okay. Why are you holding for 5 years? What happened? No, not 5 years. I say minimum 5 years because the markets will go down on an average once in 3 years. Right. So generally we have so once in 3 years market will get into bear category, and I want to ride it out. My holding period when I buy the stock and I want really I'm long on it, it is like, hey, I want to marry the stock forever unless the business gives me a reason, not the stock price, but unless the company's business give me a reason of why to divorce it. And I think in previous sessions I talked about first of all, how to date a stock, how to stay married with a stock, and then life doesn't work out always as you think it would. So there are reasons to divorce the stock. And then I have my own reasons why I would divorce the stock. Right? But when I'm buying the stock to hold in my portfolio, I want to be happily married forever. Okay. All right, so let's look at the market overview. Weekly performance. Yeah, that's when Apple is down because of I think it's the first time market has seen that Apple have announced something and then they have retracted it. Right? So I think that's what not working in Apple's favor. That they had announced that the Siri enabled your AI enabled phones will be available. Was supposed to be maybe later this year or earlier next year. Now they pushed it out to 2027. Market didn't like it because they're already far behind in terms of coming up with their AI strategy. And of course, in China, they have not yet finalized who the partner would be. I know they're talking to Baidu, but all the Chinese rivals have been zooming past Apple in terms of the sales. So this year hasn't been great for Apple investors. But if you look at over previous many years, it's been a great company to own, but not this year. What we're looking at is like a down 12.45% year to date. Now, if 100% of your portfolio was Apple, yeah, it's probably going to give you some sleepless nights. So that's why I emphasize a lot on position sizing. You have to figure out, if you're invested in individual stock, assume that it is going to go down 25% any day. Tomorrow, just the biggest stock in your portfolio could go down 25%. How would you feel? And if you're feeling that you're gonna have your stomach is churning, you can't sleep, maybe lighten up your position. That is why even though I review a lot of individual stock, my biggest holding is still S&P 500. So Apple has been great stock, but hasn't done anything for almost where we are back here. Right? For last 8-10 months is back where it was. And maybe if we extend it, where do we go back? Yeah, I think that's so you lost all the 10 months of gains that have had in Apple in what, 3 or 4 weeks. This is what individual stocks risk is. Right. What else? Nvidia had a good week. Overall, not that great on a weekly basis. Monthly basis, it's even worse for the tech companies. Though the so-called defensive sectors, utilities, consumer staples, you're still gonna eat, you still need toothpaste, you're still gonna spend on toiletries. Some of those stable companies will continue, their performance, or will continue to grow up 2% or GDP rate. And if you can cut down the cost, they can increase their earnings more. But so when there's a fear in the market, people tend towards a little more defensive sectors. Right. So I have a chart. We'll look at the top 3 performing sectors are all defensive sectors. Right. Year to date, this is where the condition is. Again, on the tech side, down. Consumer discretionary will be down. Some of the but. Hey, Google is down, or let's say Nvidia is down for year to date, it's down what, 9 or 10%. Does it really matter that Nvidia has been up like gazillion percent over the last 2 years? Now it's gone back down 10% since then. It's okay. Well, that's 10% is nothing when it comes to any individual stock. Now, if you were bullish on Nvidia at 140, Gosh, this was available at like $100 or maybe close to $100. Yeah, 105. Unfortunately, many of the retail investors will get excited when it is going up. We would love to buy it at 100, 130. The same company is available at discount. We are afraid of buying it. Stock market is the only market where people don't like discounts. No one wants to get 50% off. That generally happens because I don't know what am I buying. If you know what you're buying, then yeah, you can buy it 50% off. Sector performance, I think this is where we look at healthcare sector. You still gonna take your medicines. Utility sector, no one gonna turn off their lights. We're gonna still, I need light, I need water. And I think a little bit of a utility sector could have done better, but a lot of the energy companies that got, like especially nuclear energy companies that were popped up by the whole AI demand, they also corrected. Consumer staples, energy materials. What has not worked out this year are the discretionary sector, largely Tesla. Big component of a consumer discretionary is Tesla, and Tesla is down what 50 per total drawdown of 50%. What's a Tesla drawdown? Geez, drawdown of 53%. And there's a little bit of a politics involved around this. People hate Elon Musk, so that's also rubbing on this one. I don't want to get into that, but Tesla had no business going up 70 or 80% after the election. So I don't know. I see a lot stuff on Twitter saying, how come Tesla is down so much? I'm like, how come Tesla was up after election so much? Nobody questioned that. And if you're buying on while it was going up, can't blame anyone else. You should have known what you are buying. And I have a huge respect. Look at the Morgan Stanley. They have put out a $800 price target for Tesla. I haven't looked at the report, but I saw somewhere in Twitter, $800 price target. There are a few analysts that are always bullish on Tesla, like Dan Ives, Adam Jonas. That's fine. You need to figure out if that works for you or not. If you're investing in Tesla because maybe next year your kid is going to college, or maybe you're going to college, or you're going to sponsor a trip to Bahamas, you can't do that. We don't know what's going to happen with Tesla next year. So huge portion of the consumer discretionary down 15% coming from Tesla. It's a big company. And these are like market cap weighted information tech. These are the tech companies. Overall S&P down. This is as of Thursday. So market first 10% correction since 2023. Yeah, I don't know why they call it correction, but it is what it is. So we haven't had the 10%. I think in 2023, from September to November, that's where we had 10%. And now this is too steep. I think why it's hurting is because it's took just 3 weeks. On February 19, market hit new all-time high. And then it's not even 4 weeks. And we are back in a so-called correction territory. Dave says Regeneron down huge from almost 1,000. Good entry here. I have not looked at Regeneron. I'm not I was a big investor onto pharmaceutical, etc. companies. Only one individual so-called pharma stock that I own, that I bought it during COVID, was Johnson & Johnson, because it's a decent dividend paying stock. Also, it was and I have it in a 401k, so it doesn't impact me from a taxation perspective. Other than that, I don't know how this whole industry works. So I have not looked at Regeneron, so I can't tell you why the Regeneron is down. But when you got in Regeneron, and if your business thesis has not changed, maybe you should, then maybe it's an attractive price point. I don't know, REGN. Oh, geez, that's no, it's like 6% down year to date, but yeah, it's almost 44% drawdown from its recent high. Is it available at a cheap price? That all depends on what its expected earnings is. I'm just looking at it is cheaper than the overall market. Let me put it that way. But that doesn't mean that it may not go down further, because I don't know what is causing it, what business they are in, how much drugs they have in pipeline, so on and so forth. A lot of pharma companies have been down after, we had a new HSS secretary, right? And so in a lot of pharma companies, the only pharma companies that have been working over the last 2 years was those that have to do with the GLP-1, right? Now even those also now been selling off. So I don't know, maybe Regeneron doesn't have any GLP-1 play. Is that the case? So I don't have much insight into Regeneron, but yeah, it's like, if you are a tech, not tech, what do you call it? If you are a technical investor, right? TA. Yeah, this stock is down, more, it's down lower than 200, your moving average. It's basically lower than all the averages. Right? But yeah, I'm not a big in a TA. I don't know about the business of it. But overall valuation, it is cheaper than the S&P 500. Dave, I've been adding NVIDIA daily, so soon I'll be out of money. NVIDIA has become cheaper than where it was. I think it is. So looking at their projections for revenue and earnings, yes, NVIDIA has become cheaper, and like 105, 110 as a price point at which I also added a bit. When would be a good time to sell NVIDIA? How do I gauge such a thing? If you find its valuation has become egregiously expensive, it will not, NVIDIA companies, great companies are never available at a cheap valuations. They're always expensive. But if it becomes egregiously expensive, that's one when you will sell it. Number two is when you realize that they don't have a business mode anymore. And slowly that's going to happen. NVIDIA cannot continue to enjoy, 60% net profit margins. So far they have been. So you need to follow on NVIDIA business and see if the business still, if they continue to grow at the pace at which they have grown for last 2 years, might happen for a year, 2 years, who knows, as long as the AI demand continue. But sometimes people will, even with no change in future earnings or revenue growth, stock price will just go up because people become too optimistic about it, and it start trading at some egregiously expensive valuations. We have seen that with Palantir. Yeah, then it's time maybe to trim something. So is Tesla an unwise purchase? Now it's going down, and is Rivian or another car stock a better alternative? I think I talked about Rivian earlier. I still want Rivian to prove that it can survive for a little longer term. So I'm not in Rivian, but that's the stock which I have on my radar. But Rivian have its own. I mean, they always need a help. Recently, they got help by Volkswagen, right? Because it's a company which is still on ventilator, right? They always need external help to survive. And if that help vanishes, I don't know what will happen to Rivian. I just want Rivian to start walking on its own and not always need someone else's lap. You have to get down from the lap and walk on its own. Then I will become interested in Rivian. Tesla side, Tesla is more about story than about the financials. If you only look at an auto company, which I know Tesla bulls will hate me for it, Because Tesla is not auto company, Tesla is software company, Tesla is robotics company, Tesla is energy company, Tesla is everything but auto, even though the 80% of the revenue comes from auto. So I will consider it as an auto company. From an auto company perspective, Tesla is overvalued. Don't touch it. But I own Tesla because of the story of the future. So when you're investing in on the story basis, make sure your position size is okay. Because the stories and the narratives can flip. Right? So from that perspective, yeah, I will own Tesla because of the story around Optimus, because of the story around Robotaxi. But I'm not going to make it a huge portion of my portfolio. From my auto company, it is expensive, but there is a lot of a story behind Tesla. So that's why Tesla is always fun to talk about, because you just can't bring up your numbers and say, run your DCF, reverse DCF, or look at some ratios and say, oh, come on, it is so expensive. Oh no, that's just one part of your investment thesis. There's a great story behind Tesla, story for future, and future is inherently uncertain. So that's why I own Tesla, small portion of my portfolio. Dave is saying sell Nvidia weekly covered calls if you're on. Is yeah. Reduce. I think I have a put spread and a covered call for April. Right. What do you mean by covered call? That's gone. Andrew is asking, what do you mean by covered call? So these are the options. Basically use of derivatives to reduce the risk in a portfolio. I have been using it for many years to stay invested in the market. All the hedging etc. I do is using options, but it's going to be a very long topic. There's a boot camp. Oh gosh, I don't have a link handy right now on my website, which I did last year. I think that was the 5th time I did a boot camp to just give you, those who are new to options on how to use options for hedging, what are covered calls, how do you reduce risk, so on and so forth. I'll just put the link here. And where's the boot camp? Okay, so okay, so see, again, you can all get it for free. Yeah, anyone charging you for teaching you on options probably don't make money through options. Okay. So you can go and there are 14 or 13 session series I did on a boot camp, talking about the very basics all the way to how to hedge your portfolio. Have you tested any AI? Nope, not yet. Trading platform I like the best. I use two, Thinkorswim and TSD works. All right, so let's continue. Pullbacks are normal. This is what I was talking about, that I have a chart to show you. From 1928 to 2024, right? We have had, forget about how many dips we had, corrections like this. Currently, we are in a correction mode. Right? Mean number of corrections occurrences per year, you have every 1 year. Every year, you will have a 10%, 5%, 10% correction. Bear market once every 3 years. So once every 3 years, you will have a bear market. So if you're thinking, oh my gosh, the market is down 20%, come on, that's how the markets have always been. Right? So we have had 2 great years in the market, which nobody expected. And now if the market goes down 10, 20%, I'm fine with it. It's okay. Take a deep breath. And if the companies continue, if you still hold a good companies, they will continue to work fine. Okay. Yeah. So I'm ready if we get a bear market. Whether we will get it or not, who knows, right? And this year, value has outperformed growth. So all these are like so-called value stocks, right? Low PE. And so these are performed much better than so-called the growth stocks. I think we already looked at sector-wise. Similar story in a different way. Bonds have outperformed equity because bonds are fixed income instruments. So for equities are like negative, bonds are anyway gonna outperform. This is aggregate bond index is up 2.3%. If you go towards, let's say the corporate bonds are yielding 6 to 7%. Right? And markets, S&P is down 6%, Magnificent 7 is down 14%. It's already in a bear territory, right? So, but yeah, Magnificent 7 has done great 2 years, but now it's giving up some of those gains. Also, I guess some of a seasonality. Your tax season is coming up, and when you have to arrange for a cash, as an investor, what do we sell? The things that are profitable. I'm gonna, because like, oh, come on, I made money on this one. I can sell some of those stocks to raise cash because now I got a taxes to pay. So people generally will sell their winners to raise cash. So I'm not surprised that some of these Magnificent 7, apart from other stuff, has also, given up a lot more because you tend to sell your winner to raise cash and to lock in your gains, right? Otherwise, it's all paper gains. So to realize the gains, you have to sell the stock, and then you're like, oh God, I'm up like, if you invested in Max 7 at the end of 2022, you're probably up 60, 70, 80%, and you're saying markets are jittery, let me lock in my gains by selling some. Happen. So that's also what we are seeing in the market. Gold has outperformed S&P 500 this year. So gold has been up like 13.67%. We see a lot of gold flying in from Europe. I think 2 weeks ago or 3 weeks ago, we looked at the story of gold coming in the commercial planes, all because of the dislocation in the pricing in the London market and in the US market. Right, so a lot of gold buying has been happening. Central banks have bought gold, and when there is uncertainty at a global level, people tend towards gold. Bitcoin has not yet reached at that stage, so don't hate me if you are a crypto bro or crypto girl. Right, Bitcoin is still a little more on a risky side of asset, a little more higher beta. But gold is still, for the majority of the world, if there is an uncertainty, if there's a fear in the market, people tend to go towards gold. So we're talking about global tariff. All the big countries that are trying to tariff each other, and there's a lot of uncertainty. So yeah, people have been bought gold. Gold has now crossed 3,000 per ounce. It's a new record for gold. And so is the worst over? If you believe in the historical data, again, I'm not saying that the worst is over. I'm just bringing you these charts so that you can frame your own opinion. Sue says, is gold affected by tariffs? Yes, it was. And I think I covered up in last 2 weeks ago around why there is a price increase. And a lot of this gold demand has been also from the big Wall Street firm that trade in gold futures and all that stuff, right? So now since the demand of gold, so the price of the gold in the US market has gone up, so they have to take the delivery because some of these JP Morgans of the world, they do these carry trade, right? Buy spot gold, sell futures and all that stuff. Now the gold price in US has gone up. They're losing money on the futures, so so the whole idea of the story, and it was I think in Bloomberg or Wall Street, they want to get a physical gold to now close those and deliver it to stop the bleeding and all this. So a lot of these are the global assets. There are a lot of stuff that get impacted by a lot of things that are happening in the market. Sometimes we don't even know the mechanisms involved in it, right? And getting gold is which trade in the New York market versus gold, that physical gold that trade in the London market are different. That was another interesting stuff I learned. So has the stock bottomed? Stocks have bottomed to March 12 for the past 20 years. From Carson Investment Research, and then stock continued to go high. Again, I don't know. Everything is every year is different. So what may happen this year, I have no idea. But this might soothe you a little bit, saying, hey, generally in March, the stock come to the bottom and then they start to go up. But this year is different. We are talking about tariff, etc. Anything could happen, right? And the data is only for last 20 years, and we had only 1 year in those 20 years of Donald Trump where we were all talking about tariffs, and the stock market performed fine during Donald Trump's first year. Inflation didn't go high. The whole idea of the concerns around tariffs is everything will become more expensive. But the inflation didn't go high in Trump 1. Andrew, what is the best way to buy gold, do you think? So I don't own physical gold because of the storage cost and all that stuff. Someone can steal it from me. Someone can break in. So my preferred way to take exposure to the gold is GLD. There are a lot of folks who want to also take exposure in the gold miners as a proxy. So GLD is the biggest gold ETF, the largest gold ETF when it comes to AUM, and probably the one that tracks very closely to the real prices of gold. Other vehicles are, you can do GDX, which is a gold miner ETF. But if you are investing in the gold miners, these are eventually the companies. Companies get impacted by increasing interest rates and other economic factors, right? So me personally don't want to have those factors impact the portion of portfolio that I want to allocate for gold. So I go with GLD. But I've seen people trying GDX as well as GDXJ. These are the 3 instruments that I am aware of. Of course, you can do an individual gold mining companies also, but these are the 3 ones. Then you can go, other days you can go to Costco and buy gold bars. Now Costco is also selling gold bars, right? And do you think we should buy gold or PC? As I don't have unlimited funds, which one do you think I think BC is Bitcoin. I have no. So anyone if you're trying to go on Bitcoin, my thesis is 15 years. I don't want to invest in Bitcoin for next year or 2 years. I think the existential risk has been removed, but execution risk is still there. Prior to 2024 or 2020, prior to 2024, I still was of opinion that Bitcoin is having this existential risk, that it could just go away. Now I don't think it will go away, but it's got a lot of execution risk. So if you want to invest in Bitcoin, have a really long-term thesis, right? And I can't tell you whether to buy in a gold today or not. So I always have a little bit of a gold in my portfolio. And I had a covered call on it, and some of that I had to sell, but I'm still holding the rest. Fear and Greed Index 21, it has recovered. I think over the last 2 weeks, in between, I saw it at 16, which was probably the most fearful index that I have seen in last 2-3 years. I think when we had the yen carry trade blew up in August, I think the index went to 17. But over the last 2 weeks, I actually saw it at 16. I'm like, wow, lot of fear in the market. And now we recently also had a Michigan consumer sentiment survey came out. Consumers are fearful. If you look at AAII, American Association of Individual Investors, if you look at their survey, the number of individual investors that are bearish is again very, very high. I generally consider it as a contrarian indicator. I want to be little bullish when the market is in extreme fear. Yeah, it is difficult to do it. When you see your portfolio, when you open your trading platform, see red, it's difficult to say, I want to be bullish. Let me go for some shopping. Right? But that's what you need to train yourself to think and act contrarian. And I want to be either neutral or maybe little bearish, and put little more sell cover calls a little more aggressively when it's in a greed and extreme greed. But that's just me. And trying to I use these as a little more contrarian indicator. So yeah, so I did some shopping this week. I mean, or not this week. We're meeting after 2 weeks. So I'll tell you over the last 2 weeks what did I buy, right? So because now everyone is selling, so yeah, things are available for a little more discount, and so I picked some. Market go further down because I have no visibility into what's going to happen tomorrow. If it goes further down, maybe I will deploy a little more capital, right? And then hold the rest. So it's always helpful to keep some amount of a cash on the sideline just to take advantage of opportunities when it present. For someone having long-term thesis and cash on the sidelines, these corrections are opportunities and not, these are opportunities to, I would say, a useful or profitable opportunities and not painful process. But if you don't have a cash on the sideline, or if your outlook, or let's say if my outlook was only 1 year, it's a very painful situation to be in. So let's go through the prior week backlog. Do we have Sridhar? Sridhar, you there? No, so I'll skip Duolingo then. So for those who are joining for the first time, once in a while, someone wants to look at the company. So if you want me to look at a company, I can bring in some of the things that I look for, in a good businesses: gross margins, capital allocation. Is it secularly? Does it have secular tailwind behind it? How capital intensive is it? Cash flow, etc., etc. We look at some of those numbers. You can bring in the story. And I can tell you, without knowing about a company, just what these numbers tell me something about the company. And then you can tell me, how far is it right? And then every investment thesis is a combination of the numbers and the stories. So if you have any stock, you have to tell me two things: who the CEO of the company is, and what is the market cap of the company. Then maybe I'll bring up this data for the next week. So I'll skip this. Sridhar is not there. I'll move forward. But if you have any company that you want me to look at and maybe have some meaningful discussion around that, give me two things: the market cap and the name of the CEO. Marvin says about Google, Amazon, Microsoft, I think AI demand will explode in 10 years. Yeah, if that's your thesis, that's fine. AI demand may explode. So there are two things again when you're looking. The demand may explode, but the question is, are these the companies going to benefit? Are the newer companies going to benefit? How much of that is already priced in and all that stuff? All that need to be looked at, right? And if you feel comfortable, yeah, sure, why not? Dave says COPX ETFs. I can't, these are for the individual companies. Now this analysis is for the individual companies, Dave. So you have to give me individual company and the market cap and the CEO. Okay. All right. So look to what's happening next week. We got some earnings coming up next week. What am I interested in? Inspired, high tide fibrogen. Nothing. We are on the tail end of earnings week. Nope. Bitcoin Depot? We have a company called Bitcoin Depot? BTM. What the heck is that? Anyone heard about this company before? What it does? BTM. Let's look at BTM. What is this company? Oh, network of cryptocurrency kiosks. They've been around for 2016. Oh, wow. Actually, $585 million revenue company. That's interesting. I wasn't aware of Bitcoin Depot as a company. Okay, Stone Co. don't own in portfolio anymore. So yeah, gonna be a little, I would say, lighter week. Nothing here. Nope. Okay, it looks like Nike and Micron are two big ones. Then you got a Neo. The Neo is doing on Friday, so that'll be interesting one. Not too much for my portfolio. Dave, talk about Intel. So Intel, we can look at numbers. I think Intel I looked at a few weeks ago when it was trading at 70% of its book value. I did buy Intel at that time. But yeah, Intel's price has gone up because of announcement of new CEO, Lip-Bu Tan. So yeah, I can look at Intel. But right now, Intel is all about their future is around. I don't think it make any sense to look at the history of the financials of Intel. I'm not blowing you off, Dave. I can still bring up those numbers, but that's not going to decide what's going to happen on the stock. Right now, the stock is trading on the probability of if Intel will separate out his foundry and the chip design business. That's what's the previous CEO, Pat Gelsinger, he did not want to separate out the foundry business from the larger Intel. And he was shown the door. Now I know TSMC is trying to partner with other companies to maybe take over Intel foundry business. We also heard about Qualcomm is interested in it. Right now, that is the only story. So looking at the past numbers doesn't make much sense for Intel future prospect. Right now, it's based on what they're gonna do with their foundry business. Okay. Of MU, the Accenture DRI, yeah, big bet for me, 5,000 shares. Yeah, I mean, yeah, if you are bullish around Intel, which I mean, the stock is still, even though the stock has performed this year, but it's way down from its recent highs. So it's all about can it become a, I don't even know, maybe just stay as a fabless company, and then the fab portion is taken over by TSMC or someone else. Only bullish reason, only thesis that I have Intel, why I hold little bit of Intel shares, not 5,000, not even 1,000, just to keep me engaged in it, like on the radar, is, hey, it's an American chip manufacturer. We don't have anyone else left. It is strategically important for America to retain the chip manufacturing technology. But if TSMC is building up like 2 or 3 plants here, how much of that strategically important thesis is still valid? I don't know. That's my only thesis why I am on Intel. Otherwise, I don't see any reason. I mean, why would I invest in Intel that's so far behind in chip manufacturing technology as against TSMC? The only reason is, dude, that's the only American company. Government will save it. Right? So it's all about the story. My Intel is all about story. Previous numbers doesn't mean anything around Intel. Intel versus NVIDIA, completely two different companies. NVIDIA is fabless, more on the designing on the GPUs. Intel is still trying to figure out its ways in. On the CPU side, AMD is eating Intel's lunch. On the GPU side, NVIDIA is crushing it. They haven't yet figured out a sweet spot of why I should go with Intel, except that it is strategically important. They came up with a Gaudi chip for AI, etc. I don't hear anyone talking about Gaudi anymore. It didn't really work out. Okay? So it's a right now you can say, yeah, I mean, it's a distressed play, and yeah, there is a way to make money in distressed assets, right? But this is, but you can only make that limited amount of money. You need to be really understand what's the real valuation of it is, and on the when it comes to the investing in distressed asset, right? Howard Marks, all his life he has done is fixed income distressed asset investing. Very, very successful investor though, but that's a different level kind of investing. I'm betting Trump policy might help Intel. I'm betting too. What do you think of Zoom's potential? Zoom has disappointed me. I thought they can become little bigger than just webinars and all that. They could become a video platform, just like Salesforce had become, on which other companies will build solutions using their video tech. Nothing has done. So Zoom could still be a good, because the company has always been profitable. Company has been cash flow positive even when they came IPO. So it could still be a steady company providing some decent return, but no more, don't expect fireworks unless they have changed and try to grow beyond just the video conferencing. So I remember talking about Zoom in 2022, 21. I'm like, I would stay with Zoom if they can. Whole long-term thesis why it could become a platform wherein few other companies will build a solution on top of Zoom, but that didn't happen. Who will compete with NVIDIA? Hardware is so hard to compete in. NVIDIA doesn't make hardware. NVIDIA only design the chips. And NVIDIA's moat is not just the chips. NVIDIA moat is also with the CUDA software. All the chips are manufactured by TSMC. HIMS, I've talked about HIMS earlier. I can bring up the numbers look very, very bad. The historical numbers on HIMS are bad. But okay, I'll bring up HIMS. I know HIMS is a stock that a lot of retail investors love it. Along with some of the other like Celsius, etc. Palantir, Celsius, HIMS, and now recently is Grab. Because Palantir is going down, so they moved over to the new one, which is Grab. But yeah, I can bring up. Okay, so we'll bring up HIMS for the next week. But you have to bring me the story behind HIMS. When I have my own thesis on HIMS of why I have not invested in it, you may have a different. So you have to tell me the story on HIMS. What do you see in a story in the future? Numbers are not that great. Right? So it's all about the story of future. GLP-1 was a story with the some of the GLP drugs out of a shortage list. That is no longer the story. So there may be something else, Dave. You bring that one up. Yeah, hardware design. Yes, NVIDIA is a designer of the chips. They don't manufacture. I mean, I just want to clear. I have heard a Wall Street analyst talking about NVIDIA manufacturing chips. I'm like, what the heck are you doing? Sometimes talking heads don't know because they think NVIDIA is all about associated with chips. It doesn't manufacture its own chips. It's a fabless company. And folks on CNBC sometimes don't know about it. Are there companies outside which are benefiting from GLP-1 sales? Novo Nordisk and the Eli Lilly were the pioneer in GLP-1 and they've benefited. I think once in a while I will see some other pharma company stock popping up because their obesity drug trial have shown positive results. And I think recently, was it Novartis? some other pharma, their like stock fell down because their obesity drug didn't the result wasn't promising. Maybe I think it was Novartis. I don't own, but recently I know one of big pharma company was fell down. So it's a GLP-1. At least all the known companies are outside of US. Yeah, Novo Nordisk and Eli Lilly had a huge run because GLP-1. Do you recommend following a certain fund manager investments? You can track 13F, but fund manager, you only get to know as the end of the previous quarter what they've done next quarter. You don't know. And I've seen fund manager coming and talking about how great, how bullish they are on a company. But when I look at the 13, I'm like, you sold all your positions, dude. If you were so bullish, why did you sell your positions? So fund manager operates sometimes from quarter to quarter. If it is a decent fund manager, they operate from year to year. There are very few fund managers who will look beyond a year. Right? So get investment ideas, but frame your own thesis looking at your own timeline. We have a huge advantage over fund managers. I don't want to give up that advantage by following what fund manager is doing. As an individual investor, you don't know how much advantage do we have. I can invest in any damn thing. I can invest in Bitcoin. I can invest in meme coin. Fund managers can't do it. I can invest in ETF. I can invest in individual stocks. Some fund managers can't do it. They're just equity fund managers. They can't invest in ETF. There are some bond fund managers. They can't invest in equity. I can invest in anything. Fund managers have to compare their scores with other fund managers every quarter. I don't have to compare scores with you. I can a much longer time period. Right? We have a huge, I think I have a list of advantages that I've shared once over LinkedIn. As an individual investor, we have a huge advantage. Just don't give up those advantages by blindly following any fund manager. Ashwin says India is set to become pharmacy of the world. We should see some big winner there. So India is like a contract manufacturing. Right? I don't think India's pharmaceutical is like the basic pharma drugs are coming out of it, but a lot of a contract manufacturing is happening. I don't directly invest in Indian companies because I don't have a time to follow those companies. So I just use India broad-based ETF to invest in India. But yeah, if someone is doing direct investing in, if you have a time to follow individual companies, yeah, go. And then you can, but yeah, if I don't have time and energy to follow Indian companies. All right, so let's quickly buy and sell. Not recommendation, just more from a transparency, being transparent, right? Because I'll talk about the stocks, and then I don't want to come across, okay, if only after the stock has gone, I'm telling you I bought it, right? So I'm telling you upfront, I don't know what might happen to the stocks next week or 2 weeks later. So AristaNet, these are all the buys. ANET, TSM, Taiwan Semiconductor, Shopify, Amazon. I had a put spreads on it. And then those are all in the money because the stocks are down like 10, 12%. So I bought those shares and closed the put spread. Okay, Tesla, XLF, TTD, I actually bought shares. I think Tesla, I still have a put spread, which is in the money. So I may buy a little more. But at the end of 314, as of yesterday, I bought a little bit shares on Tesla, XLF, and the trade desk. Okay. What did I sell? I sold a little bit of a BABA because my call spread was in the money. So sold some shares, closed the call spread, and now I think I have another option trade, maybe Iron Condor on BABA. So we'll talk about what's happened. If that anything happened to the Iron Condor, then I will get on to, I'll probably tell you in April because I have a April Iron Condor. All right, so what do you want to look at? Shall we go to the crypto side or shall we look at maybe some company news? Maybe we'll spend some 10-15 minutes on crypto and then we'll come to the individual company news. All right, so let's look at what happened on the crypto side. Bitcoin is back up. This is a screenshot just before the meeting. But it's volatile. So I don't know if it is below 84 or not, but a little bit of a recovery that we have seen. I think at some point of a time, Bitcoin was at 78K. And now it has recovered a bit, but it's going to be a volatile asset. A lot of stuff happening with new administration, and which is causing, a lot more volatility in this. But if you're in this asset class, it is a roller coaster on steroids. Okay, but let's look at the real crux, right? Price doesn't matter. If it's 84K today, next week might be 100K, and that could be 80K a week after that. Who knows? Genius Act, which is earlier used to be called a stable coin bill, it has actually passed the Senate Banking Committee. So one step is done. So this bill basically define all the rules and regulations around stable coin issuing, right? Who the issuer could be, why will they issue it, what kind of KYC you need to do, how do you make sure that terrorists are not making you or not able to game the system, and so on and so forth. Quick 6 takeaways. It prohibits the issuance of payment stablecoin by any person that is not a Okay, I think this is pretty clear. If you're not a permitted issuer, don't issue stable coins. SEC will come after you. So far SEC was a little bit arbitrary and capricious in the words of the court judge. Now they're defining the rules so that all the players are clear. Coinbase will be clear, Kraken, any issuer is clear. Okay, these are the rules that you have to play by. It defines the payment stablecoin as a digital asset that maintains a fixed value. Right? If your current stablecoin depegs and trading at 70 cents instead of $1, it's not really stable. It has to maintain the stable value. It imposes federal standards, including requirement for fully backed reserves. Right? This is very, very important. How are you going to maintain the peg? You need to have a reserves, which is the equivalent amount of a value, right? How the segregation will happen? How do you know it really have a reserve or not? There's a lot of a FUD around Tether. Right? Oh, they don't have any reserves backing whatever. What is Tether worth right now? Oops, we had a Tether up there, right? Tether is worth what? $143 billion? Do you know they really have a reserve to back up $143 of USDT? There are certifications being done, but not really audit and all that stuff. I know Tether probably is okay because Cantor Fitzgerald has looked at that and said, yeah, it does have it. But now we have a very well-defined law on what kind of reserve, how the reserve will be segregated, etc., etc. Will allow state-regulated payment stablecoin issuers to issue stablecoin only if it is similar to federal regime. So a little bit conflict between state and the federal, some laws around that. It gives federal banking agency enforcement authority on what they can do over basically stablecoin issuers, just like they have on the banks. 6th takeaway, consumer protection standards will be imposed. You shouldn't be able to rug pull the consumers, right? 7th, the final one is prohibits banking agency from requiring an asset held in custody to be treated as liability. I think this is very, very important. Now we could see a lot of banks coming into, your traditional commercial banks jumping into this, because now you can light up your balance. You don't have a requirement of, holding a matching asset against the liability, right? Which is what the SAB 121 was, which was rescinded by SEC, and now it is made even more clearer in this bill. And it has passed through the Senate Banking and Financial Committee, much to the chagrin of Elizabeth Warren. I think she tried to torpedo it as much as she could, which she has always done, anything related to crypto. But what I learned was it's no longer a blue versus red fight. It is boomer versus younger generation fight. So the younger lawmakers on both sides of the aisle, including the Democrats, voted for it, whereas the older generation voted against it. So this actually got passed by a huge majority, even with some of the younger, let's say 40 years or less than 40 years of lawmakers voting for the stable coin. Maybe they've grown digitally native. They understand the need for a native digital currency. Maybe very difficult to explain to Bernie Sanders or Mitch McConnell. But I think, of course, Elizabeth Warren didn't like that some of the younger Democrats flipped from a party line and voted in favor. So now it will go for the Senate for vote. But it has passed one, I would say one state. Over the last 2 weeks, we also had a strategic Bitcoin reserve and digital asset stockpile executive order. And that saw a lot more volatility in the crypto assets. And but I think there is also a bill being proposed which will codify this, because right now this is just an executive order. And executive order can be annulled or can be reversed by the next executive president. So some of the lawmakers actually want to make it, they proposed a bill so that we can make it a law once Congress passes it, so that it can only be reversed by the act of Congress, right? And not by someone coming in and issuing EO. Do you think stable coins will kill Visa and MasterCard? I don't think. Visa and MasterCard have been in crypto for a few years already. They have seen the writing on the wall. I think MasterCard has got a lot of patents on this, and they've already tying up with, forging relationship with some of these stablecoin companies. So if we just Google for Visa or MasterCard, they are way ahead than what we might think in getting ready, getting prepared for this scenario. Fees will be much lower with stablecoins. Yeah. Right. That I agree. It's just that they'll figure out other ways to make. Now, what Robinhood has done, they've taken out the fee. Now we can trade commission free, but then these companies will have to bring up other value-added services. Right? Is there a group Discord channel connected with you outside of this call? I think I have a Slack channel, but not very active. Most of the folks have other regular job. I think I'm the only one who will post something, my analysis of the stocks, or hey, these are the earnings coming up. But Ashwin, yeah, if you want to connect, maybe I can give you the link for that Slack channel. Oh, where did I have the Slack channel link? Hold on. I think in one of the option camp, boot camp, I had that. All right, 1 second. Again, that's not I don't believe in too. I myself am not too chatty when it comes to the stock, etc. Because you need to have, when you're doing an in-depth study around your stocks, okay. I think, let me just find it. You need to time to do your research and all that stuff. So options. Okay, let me just give you Slack channel, and if you have a question, maybe ping me over there, or if you have something interesting to share. So I put the Slack channel. Yeah, click and see if this is still active. I mean, I don't think I've changed the invite link for over a year. But if it doesn't work, let me know the next week, and I'll create a new one. All right, what else happened? Solana interesting stuff on Solana. Some of the VCs, and this is why I always had a concern on Solana that it is control. I mean, a lot of VC money in this one, the whole issuance, etc. And it's not as decentralized as you would think it would be. So there was a one VC from Multi-Coin Capital. If you are in a crypto, you would have heard about it. Kyle Samani and I think Tushar Jain. So they had proposed a change in the inflation rate of Solana, and that proposal was rejected by the community. So they wanted to reduce the inflation. Right now, Solana is very inflationary. So even though you might think, oh my God, Solana, let's say if you stake Solana and you receive a decent yield, staking yield, but then you increasing the number of Solanas that are going out, then overall at an inflation level, you don't make that much, right? So there was a proposal, SAMD 228, to reduce the inflation, didn't get passed. It's like asking someone, those validators, etc., do you want to reduce how much we pay you for the work you're gonna do it? Come on. They're not gonna say yes. It's like asking someone, is it okay if I reduce your salary? So obviously this didn't pass. So right now inflation is at 8% annually, and it decreases 15% every year until it will reach 1.5. So too much inflation in Solana. Right. I'm not going to go through the details unless you're interested in it. I'll read you some of the top headlines on crypto. Then I'll get to the headlines on our regular markets. Argentina finalizes rules for virtual asset providers. So again, across the countries, countries are waking up saying, these digital assets are not going to die down. As an ostrich, you can put your head in the sand and say, I don't see anything. Everything is fine. But it's here to stay. Existential risk is over. We do not have existential risk. If not in your country, look at the Dubai. It has become a crypto hub. A lot of companies have moved to Dubai, including the company that scam other people, but that's always happened. Any new tech comes in, scammers will join, along with the new tech. Every new tech always happens, right? But that doesn't invalidate the tech. So I'm seeing more and more companies trying to finalize, put a regulatory framework saying, guys, we have to deal with this. It's not going to die. Just like, I think, I heard somewhere like AT&T, when internet was coming up, AT&T executives had a meeting on how can we buy internet? Because that was killing their business. You can send messages on internet for free. And all these telecom companies had a tough time. So they're trying to figure out how can we buy internet? How can we kill it? I think it was Al Gore who saved internet. There was a vote in Congress to make sending messages and images over internet illegal. And all that vote, the lobbying was done by telecom companies. And I think, if I'm not wrong, was it Al Gore or there is one, it was almost same, the one vote saved the internet. I think that was maybe Al Gore or someone else's. That lawmaker sided with, no, we should allow individual users to send images and information or messages over internet. The incumbents will try hard to protect their turf. Let's buy internet. Let's make it illegal to send images. Right? Similarly, incumbents will have tried hard to kill anything related to crypto. This is terrorism. There's a lot of scams. There's a lot of, you can't track who's doing what, all that stuff. People are getting, they are investing life income into meme coins and then, getting burnt. Happens with every tech, right? But you got to adapt to it. You can't put genie back in the bottle. So Argentina finalized the new rules. US House follows Senate to kill the IRS DeFi broker rule, which was like, you can't even comply with that rule. The rule that was, you can't even comply with it because you don't even know who is accessing that stuff. So now good that regulator, our lawmakers have killed that rule, which was IRS. Again, since there were no regulations, these agencies were coming and creating laws. Like SEC had done a few, IRS had done a few. Now, hopefully, we will define what the right regulations will be. And then these agencies would follow them rather than creating rules on the fly. Postpone the ruling on Ether ETF options. I was looking forward to it so that I can start selling some calls or use options to reduce the cost basis on Ether ETFs that I own. But no, I'll have to wait maybe until next is when maybe May 14th. So CBOE had requested to list options on Fidelity Ethereum Fund, but that's SEC had asked for more time. I guess, I don't know what's holding SEC, but ever since IBIT has come in, the options on IBIT has come in. It's been wonderfully selling options on it at reducing the cost basis. Right. If you reduce the cost of ownership of your stocks or whatever ETFs, then it becomes easier to go through this volatility, right? Or 10% drawdown, etc. So right now, IBIT is at lower price than when I bought into IBIT. But if I include all the option income that I've generated since 17 weeks of options being available, 16 weeks of options being available, it is still profitable. So I can hold on to those assets, continue to reduce the cost basis. If it becomes zero, I own it for free and clear all the stocks, right? So then it's all infinite gain for me. That's what I love, how I use options. Ashwin said, never understood the fundamentals of crypto. What's the backing asset behind it? Every currency has a country backing it. Who backs a coin? That's what when we look at a stable coin, that's where the regulations will be. You need to have the reserve on a stable coin, right? So that's what the regulations are being defined. Who backs US dollar? It's the US military, right? Otherwise, it's just a paper money. Nothing, no hard asset. It's the promise of US government. The day the rest of the world think, my God, US government is not really trustworthy, dollar will have a tough time because nothing backs dollar except the US government promise. Right? So there are different use cases. Again, 99.5% of these all crypto projects are fake and scam and will go the dodo way. Just like many of the .com companies had no business model. But that doesn't mean that you can still not use this tech for certain things where it is actually useful. Right? I've talked about it ever since we started doing these webinars for almost 5 years. But like I said, it's got to be a 15-year, 20-year journey in this. Right? There is a different use case for depending on which crypto digital asset you want to pick up, right? I don't call them as coin or currencies because they have a different use cases. Some will have as currency, some might have a store of value use case, some might just have a facilitator of a value, right? Stablecoin doesn't go up in value, but I was asking my brother-in-law, he's in UK, and we've been like, if I were to move money to him, I'd looked at Wise, charges a lot, can do wire transfer, charges $16. I'm like, dude, can you not have a USDT or USDC? I'll just transfer you that at a fraction of at a few pennies. Right? Western Union charges what 16%. All those businesses will go dodo way if this gets regulated. There are use cases, but like I said, 99.5% are just scammers. Final fun. Winklevoss they had a 1,000 drone Bitcoin show. And maybe I'll just show you the video. Let's see. Where's the Bitcoin comes along? Not here. Looks like this is a new record. They did in what, Texas? Okay, I think, yeah, somewhere near here. Enjoy this while I sip some water, and then we'll get to the rest of the stuff. All right, that's a new, I don't know, world record. Gemini calls it a world record, so maybe don't believe anything on internet. All right, let's look at some of the companies, stuff, news, etc., etc. Do you find a cheap way to do a USD to GBP transaction? No, I kind of a little bit gave up. So, and then he really didn't. He said, okay, he doesn't need it right now. I'm like, dude, just get a USDT. It'll be really, really easy. Right. I tried to use Wise once before. I've used, he told me to use Wise. I mean, he had an account in Wise and he gave me his routing number and all that. And then my Wells Fargo, when I tried to do it, it couldn't recognize. There are so many banks come into picture. It is painful. It's costly, right? There is one very straight use case of, cross-border payments, repatriation, which can be easily solved by these stable coins. All right. So let's look at some company news, etc. for maybe next 10-15 minutes. Feel free to drop off wherever you want to. I generally stay here till 12:30. But I know I say it's a 2 hour, but generally we stay for 230 minutes. So if you want to drop off, feel free, no obligations. Anyway, I mean, if you want to join or not join, it's all up to you. Well, let's talk about what's happening in the rest of the market. Intel has a new leader, Luc Boutin. He is kind of known as a turnaround leader. He's been kind of an insider because he was on a board of directors of Intel. And he's also ex-CEO of Cadence Design Systems. Again, Cadence is a company in the overall semiconductor value chain. It allows you to design those. When if you're doing a chip designing, you don't design by hand anymore. You use software. Synopsys and Cadence are the two big companies. So he understands this whole, this whole value chain really well. He's been a successful investor. He had a stake in Annapurna Labs, which was bought by Amazon. And now Amazon's Graviton, not Graviton, I think even a Graviton as well as the Inferentia and Trainium chips are coming out from Annapurna Labs. He also invested in Nuvia, which Qualcomm bought. So pretty successful investor. Market likes it. And I think he may be more favorable to split Intel into foundry as a separate business and, Intel chip and the design as a separate business, which is what might increase the overall value of Intel, because otherwise foundry is a cash guzzling business. It needs $30 billion, $40 billion to spin up one fab. All that was coming on to overall Intel P&L statement and was, just killing it. Now what they're trying to do is, the whole idea is, if we separate this out, maybe we can invite external investors and let the fab be a standalone and let Intel as a chip designer be a standalone company. And now if you're having a fab as a separate company, maybe other companies like NVIDIA, maybe AMD will give you some business, because now you're separate than Intel. Otherwise, hey, you are like AMD and Intel are rivals. Why would I give my chip manufacturing business to Intel, right? Now, if they become two separate companies, maybe both of them might survive, right? And of course, chip manufacturing is now a national priority, and then the government won't let it fail. What else? Okay, earlier this week, he also invested in another AI company, etc. Yeah, this is interesting, right? I talked to someone asked me, what do you think about where the market will go? Forget about me. Let's see what the Wall Street analysts think. Their forecasts are nothing more than just forecasts. So why do they do it? So here's the real data. As 2024 began, the average return forecast for S&P was 7.4% by the stock analyst. And these market strategists, right? geez, I hate the term market strategists because they're so wrong about the markets most of the time, right? That was 1.3%. Actual return including dividend, 25%. 2023, analysts predicted 17.5% gain. Strategy said 6.2%. Actual return, 26.3%, right? And I remember 2023, the, was it? Yeah, 2023. We were even also talking about what? Around 7 Fed rate cuts by the analysts and the economists. We got what? 1 or 2? After 2 straight years, analysts and strategists now cranking up their forecast up to 13.4 and 12.5% respectively. I don't know whether it's going to happen or not. The purpose is not to be accurate. Why do they keep coming with these predictions when they are so horribly wrong? The purpose is not to get it accurate. It is to start the conversation with clients and generate trades and business for their own firms. These are powerful sales tools. So before you think about, okay, this analyst said X, Y, Z, so I'm going to put in money, understand their motivation. They could be very wrong. Many of them have been. On an average, the community hasn't been done good. Maybe there are a few analysts that have performed better than the others, but you don't know, the analyst that worked this year, will it work next year or not, right? As a group, they've been very, very wrong because it's a future is unpredictable, right? Wall Street forecasts, no matter how wrong they turn out to be, it exerts a magnetic force on your mind or on their client's mind, right? So psychologist Daniel Kahneman, they actually did a study. They had a wheel of fortune numbered 0 to 100. The question that they asked the participants was, what percentage of the companies in United Nations were in Africa? If the wheel stopped spinning at number 10, people would estimate maybe around 25%. If the wheel landed on 65, the percentage went up higher. These are completely two unrelated stuff. Spinning a wheel of fortune has nothing to do with how many countries in Africa are actually part of United Nations. But our mind anchors it. We see a number, we basically that acts as an anchor on our mind for our future answer or anything that we are thinking about. Right? This is automatic property of human mind. When we think about anything that we don't know, right? People don't know how many countries in UN are from Africa. If there is any other number in our head, any random number which is like wheel of fortune, it start to form our basis of expectations. That is why these analysts come up with these forecasts. These are not merely fruitless. These are actually toxic numbers. There are analysts, influencers, all talk about stock will go up 10%, gold will go up 15%, etc. Your own estimates will start gravitate towards them. And this is why, like I said, I don't want to be too chatty because your mind gets polluted by what you hear from other people. Right? So I try hard to not look at, to not get influenced by what others are saying. Get information from them, but build your own thesis. Right? So I like this thing. Maybe I start following it from a next time is whenever I think about an estimate or prediction, put it in the category forecastable, unforecastable, right? Cash and short-term bonds, it is forecastable. So if I listen to Howard Marks, who is, big on a bond side or a fixed income, yeah, maybe I'll pay some attention to it because it is a forecastable stuff. Fixed income, you can only make that much, right? And in general, if you look into, what's been a failure rate on, let's say, triple B bond rated bonds, they stay in a similar range. Right? It is kind of forecastable with maybe a little bit of range. Long-term bonds, not forecastable. I don't have to go back way in the past. What happened in 2022? Why some of these banks went under? Even the bank CFOs, all of them got their long-term forecasting. I mean, they all held long-term treasury bonds and went bankrupt with the safest asset, which is treasury bond on their balance sheet. Right? Horrible stuff. We always say treasuries, bills, bonds are the safest assets. And now, why did First Republic Bank and Silicon Valley Bank went under? Because they were holding long-term treasury bonds. The value is unforecastable when you're talking long-term treasury bonds. Right? They could do 29% or gain 40%. They could lose 30% in 2022 or gain 40%. Stocks are unforecastable. Maybe they'll earn roughly the long-term average of 10%, right? So S&P return 10% on average. But if you cannot survive the 20%, 22% drawdown year, you're not even there to live through the average, right? So when you're building your portfolio, build your portfolio for the worst case situation so that you are still there to enjoy the 10% average return. There's a saying, average, if you believe only in average, then nobody would have drowned in a swimming pool, right? Something like that. Average depth in the swimming pool is what, 4 feet. But we hear about drowning in swimming pool. You need to be prepared for the 8 feet worst case scenario, right? Otherwise, no one will drown in swimming pool if you only look at average. Average return on S&P 500 is 10%. Oh, come on. Yeah, let's put all the money that we have, right? No, people lose money in the market because there are years when you will be at 20%. So you need to figure out how to survive that 20% drawdown, right? Real estate, gold, Bitcoin, all unforecastable. So now if you are hearing about forecast on these, take it with a pinch of salt. But this is unforecastable, right? Then you can determine how much attention or how much of belief you want to put in that number. Okay. All right, so that's Jay say, yeah, monkeys are throwing darts. Exactly. Logic to invest in SCHD. I said, right, 2 or 3 weeks ago. I think Aditya was you. Maybe you asked me, why do I invest in SCHD? 3 weeks is this. These last 3 weeks are the ones why I still hold SCHD in my portfolio, because when markets are uncertain, markets are, little fearful, people will tend towards more stable companies, which means you pay out a dividend means you're actually earning something. And SCHD is a good enough low cost expense ratio ETF, which I've been using for many years. That's why I own it. Right? So if you look at SCHD was up 1.17% as compared to S&P 500, which is on 4-5%. So delta is like 6%. Right? There was an article, I think maybe it's the Wall Street or maybe Barron's. I don't know where did I take the screenshot from, but investors are now playing defense and switching to dividend stocks. I think it also talked about SCHD. Yeah, right here, right? So like saying it's a good enough vehicle like Schwab US dividend equity ETF. This is what SCHD. Other safe plays have been gold, US treasuries for this year, but many prefer dividend, as compared to these gold and US treasury, because if the market's correct, you may also have capital gains, right? So, you have a capital appreciation, right? There is no, on the treasuries, etc., no capital appreciation. You're just gonna get your fixed income. And also regular dividend payment help cushion the declines. Yeah, I'm not keen on the dividend payment, but just that the type of companies that pay these dividends don't go down as much as, let's say, the other high-flying companies would go down when the markets, turn its head. That's what I invest in SCHD. Another thesis which I don't think anyone has talked about is we talk about $6 trillion sitting on the sidelines, right, in money market fund, right? And then one of the theses is, hey, stay invested in the market because that $6 trillion, once the Fed start to reduce the interest rate, the $6 trillion will find its way into the stock market. Now I'm thinking about it. Those who are holding T-bills, right? Let's say the interest rate on the T-bill go down. Those, what kind of investors are they? They're not risk investors. They're risk-averse investors. Right? That's why they're holding in the T-bills. When they move money towards the stock market, because now the yields are no longer attractive on the treasuries, are they going to put in the growth companies? Are they going to put in the riskiest assets? May not be, right? They might look into someone which is a little more safer. And again, I don't know what's going to happen. Right? Future is unforecastable. But I'm thinking maybe they'll go towards, can I get something equivalent of a US Treasuries, which pays some dividend and a little more safer? Because that's what a kind of investor I am. Because that's what I was holding $6 trillion in T-bills because it was paying me 4.5%. Now suddenly, if the T-bills rate goes changes and go down, that doesn't change me as an investor. I will still look for little safer options. So my thesis was maybe that money will flow not into Nvidias of the world, not into HIMs, not into Palantirs, but little more safer dividend-paying companies. So that's the second reason why I hold SCHD. Okay, I'll skip this one. But this, okay, let me see some messages. You only point out unforecastable. What about the forecastable? Anything which is fixed income is forecastable within a certain range, right? Because you know what exactly you're going to get paid. You can't get paid more than what's the coupon rate is, right? Now, little bit, there is also an uncertainty component in that is the change in the interest rate. But if you're looking if I bought a bill for 2 years, I know exactly what I'm going to get paid in 2 years. In between, what might happen in 2 years is subject to the interest rates. But I can, if I can hold for 2 years, I know how much I'm going to make. So that is forecastable. I don't think stocks are forecastable. Other thing which could be forecastable, because we looked at almost 100 years of data, is over 10 years and 20 years, stock market has always returned positive, right? 99% of the time, any running 10-year period, I think 95% of the time, any 10-year running period, stock market has returned positive. 100% of the 20-year running period, stock market has returned positive. Ever since the data has been collected since 1900s. So I think at the risk of going against my own ethos of future is unforecastable, maybe 20 years later, the stock market may be higher than where it is today. So that was I can say. All right. Other thing I'm seeing in the market, a lot of exotic instruments are coming in. 2 days ago, I got pinged on a LinkedIn by a founder of a company, and that blew up my mind what they are doing. So we are seeing a lot of a creative, securities. Basically, it's a US capital market so great. You can securitize everything. Not just we're now trying to maybe securitize real estate. We have securitized mortgage loans already. Right now, with the coming of crypto, we are trying to securitize real world assets. There is a lot of securitizing corporate loans. We talked about it, like CLOs, consumer credit card debt, lease payment on car, airplane, golf carts, payments to data centers. Lot of these. Wall Street will come up with these instruments in which they will securitize any cash flow, a little predictable cash flow payments. They'll securitize it, right? But you need to decide as an investor, do you want to invest in this or not? Wall Street want to make, money. Wall Street is not for you and me. They're there to make their own money. They can't make money now on the trading side. They'll figure out other ways to make money. Right? So we are seeing collateralized loan obligation, commercial mortgage based, as other asset-based securities. It's gonna go through the roof. And I'll tell you, for the LinkedIn, what they were securitizing was professional development revenue securitizing. That means, if you will, it's kind of, I didn't even look into their website. Someone had reached out to me saying, hey, you're interested in this. We basically securitizing this, and it's just like, you can, if I'm taking a professional course, somehow you're able to predict, maybe that will increase my cash flow by this, or I don't know if they are securitizing the payments that are coming by someone who's taking a professional course and discounting it and selling it to others, right? Wall Street will figure out how to take money out of you. But we had a similar stuff during 2008, 2007, all around the mortgage based. Now I'm seeing a lot of around the private credit, right? Yeah, a lot of stuff around private. And the pitch is, oh, this was only for select few individuals. Now as a retail investor, you can get in. Nobody want to talk about the risk. Nobody want to tell you that it is highly illiquid. Right? There are ETFs that are coming up. We talked about it earlier, right? Apollo tying up with a State Street to bring up with a not private credit. I think it's private credit ETF. Be careful. Understand what you're investing in. Understand the third party or counterparty risk. As long as it's the spring season, things will work out. But once the fall starts to come in, once the winter starts to set in, many of these players will go bankrupt. Then we will realize, I didn't think about this third counterparty risk. But a lot of these instruments are coming in, especially around the private credit, private equity, and your pre-IPO companies, ETFs based on pre-IPO. There is an ETF launch that's based on Bitcoin treasury companies. There is ETF being launched every day. There's so much of ETFs. Just because the name of ETF has been slapped on it doesn't mean that it is investable. Doesn't mean that you should invest in it. SEC approves listing of ETF, but SEC is not a merit regulator. It's a disclosure regulator. And I've said it many times. If you can write in on your S1, on your prospectus, this is a venom, if you drink it, or if you come closer to it, 5 feet off it, you'll faint. SEC will approve it. Go and list it, sell it, because you've disclosed it. As long as you disclose, it is fine. Okay. So SEC is not going to save you. Don't tell me that, oh, it's been approved by SEC. That means nothing. Ashwani says, I've been doing trading on TLT calls. It has worked out well. Yeah, I mean, I hold TLT for many years doing, I think I still have a strangle on it, but yeah, thesis is if the interest rate goes down, TLT should go up. Over the last 2 years, not been a great experience holding TLT. Yeah, Aditya, yeah, that's what you're right. There is a lot of activity in the private market, alternative assets. Yeah, all these are, a lot of these wealth companies, etc. They're all rushing to sell you the stuff. Right? But you need to understand if you really want to engage in that stuff or not. Understand what you're getting into. Understand the liquidity factors. What grade is an investment if you can't even sell it when you need to sell it? Right? What happened with the Blackstone? I think it's a year ago or something. Blackstone Real Estate. It's a Blackstone. It's a big company. And I think it was one of their real estate fund. I forgot. But they stopped redemption on that one. If you can't have a faith on Blackstone, forget about these smaller companies. Right? Do you think stocks are not forecastable? What about the simple concept, predictable cash flows, etc., etc.? The more complex the company, less forecastable it is for sure. Stock prices are not forecastable. You may be able to forecast about the business. because prices change based on what everyone else is thinking. Right? Business, you may be able to forecast, saying this is the growth, this is the reinvestment rate, this is how the market share, maybe they'll grow their market share, come up with your discounted cash flow, and you can come up with a value. But the stock price is completely different game. That may not be forecastable. Who would be able to forecast that Tesla will be 488? No one. Business hasn't changed. Business was still pre-election. Is this still the same business? We didn't have any other next quarterly report from them. Stock price is not forecastable. Every time I see Musk stock, I want to short the stock. All right, this is what I think I was mentioned. This is an article in Barron. How to tariff proof your dividend portfolio. So I think this does include some of the dividend stocks. If you want to take note of that, maybe. And the companies, I think they've done a good selection. So they looked at a screened for Russell 3000 companies, because that screening is criteria is important, that have an above average dividend yield, high rating from analysts, take it with a pinch of salt, and solid financial metrics, and are in the right sectors that may not be impacted by the tariffs. They include Anley Capital Management. It's a REIT that invests in residential and commercial mortgages. Starwood Property Trust, again REIT. This is not mine. This is Barron's. Royalty Trust Viper Energy also passes this muster. CVS Health, Provident Financial Services. These are all American businesses, yield an average of 7.4%, more than the double the average of dividend pay in the Russell 3000. Little more international companies: Philip Morris, AES Northwestern Energy, Evergy, Essential Utilities, DTE Energy. So these are the utilities, right? It should be noted that the screens can yield a false sense of security by narrowing an inevitable universe down to only a few stocks. No screen, no matter how precise it could be, can substitute for understanding individual businesses. This is just a starting point. Just a starting point. But yeah, look at these few stocks. Look at their business. Look at their fundamentals and see, do I think it's a good company to own? But it's a good starting point. If you wanted to know some of the companies that won't get impacted by tariffs, you got few names out here. Okay. All right, another one. What drives the stock prices in the long run? So this is a study, I think little dated study, but I got this chart. 80% of SPY is driven by earnings and earnings growth. 20% is because of the changing in the PE multiple, which you can include mood, momentum, etc., etc. Terry Smith, a famed investor out of, it's a London-based investor, but I think right now he's in South Africa. Fundsmith, the basically portfolio manager of Fundsmith, UK-based. His annual letters are a good read. And so he has this chart from 1917 to 1999. Like I said, it's a dated one. Return from PE growth is 20% of the return. 80% of the return is determined by the fundamental of a business, which is in long term. What determines is your earnings and the earnings growth. So if you're investing in a long term, focus on what's happening to the earnings and the earnings growth. Yeah, just a reminder. All right, so maybe I'll stop here. Maybe I'll cover some of these things. Okay, Walmart, since we talked about Walmart earlier, this is where in Wall Street, we had an article, is Walmart is lodging some serious challenge to Amazon in deliveries. 5 billion items were delivered the same day, right? And more important, Walmart can now make same-day deliveries to 93% of US households. So Amazon is getting challenged when it comes to the e-commerce side of the house, right? Amazon does a lot of other businesses, but it may not be the undisputed leader when it comes to delivery of goods. Walmart is catching up. Share prices over the past 5 years, Amazon has done a little better than Walmart, but it's only 5 years. Oh, so that was the last one. Maybe I'll just cover this one as well. It's only one thing. Why leave it for next week? We're also seeing, because of change in administration, new type of funds that are coming up, event-driven funds. Like I said, Wall Street will find a way to make money out of you. These will be, little more expensive funds with a higher expense ratio. But if you're interested, look at it. With the expectation is that M&A activity will pick up because now Lena Khan is not there. DOJ is little more amenable to companies buying each other, right? May not be as hostile as the previous administration. So merger and activity will increase. Whenever there is an M&A, there's always a merger arb that is available to exploit. But you really need to understand, the real fundamentals, whether the merger will go through or not, etc., etc. So, as a retail investor, I don't know how to analyze the merger arb. So now there are companies that are coming with the ETFs or funds. I don't know if it's an ETF, but at least a fund. These are called event-driven fund. May not be just merger. It could be another event as well, right? So Camelot event-driven fund, 5%, 5-year return is 11%, first trade merger arb. Now with more M&A activity happening, again, that's what we're expecting in future. There are more opportunities available for the fund manager to profit from the arb. It could also go in the other way around, where you think the merger would go through it and it did not go through. In that case, you will lose, as a fund manager or portfolio manager, you lose on that trade. But if you have a more of such events happening, the opportunity is more. So again, if you want to take note of these stickers, up to you. I have no interest in these. But if you want to do a merger arb, there are opportunities available. I think Rocket Mortgage, right? No, because now it's called Rocket Companies because it's beyond more. It does more things than mortgage. Rocket Companies had agreed to buy Redfin at $12.50. It was going to be all stock deal, and Redfin is currently trading at, even after the announcement, stock jumped up 60%. It is trading at $10.70. There's a merger arb to be had, right? $12.50. But you need to understand, I have not even looked at what's their merger conditions or their buyout condition is. Is it like $12.50 based on the stock prices on the day of announcement or day of closure, whatever, right? But if you are in that space, if you are a fund manager who's been doing these merger arbs, right? I think in 1980s, there was a fund manager, Ivan Bosky, was specialist in this kind of stuff. Yeah, there could be an arb that to be had. We had a big arb in Microsoft buying Activision Blizzard for many months because there was a little bit of uncertainty around whether that will happen or not happen with DOJ, let it go through or not. So there is now funds who are focused on these things. All right. So let me go through some of the comments. Options equal to timing race. Why would you make a timed bet? We have different questions. I think, like I said, I covered this topic on the options boot camp, etc. On how to put the time in your favor. Ashwin said, Professor Ashwa shared his latest DC evaluation for Tesla today. It's $150. Yeah, I mean, probably he's been a little generous, maybe give some dollars for the future stuff. Yeah, when it comes to what's the business currently, auto business worth it, you can't give more than that. So I'm with you. So by the way, those who are interested in learning, I've been attending few of his classes for free. I don't want to pay up. Professor Damodaran open sources all the classes that he teaches at NYU. Either you can pay to NYU whatever, $3,000, $4,000 to do that class and get a certificate. If you're hunting for a job, I'm not hunting for a job. I just wanted to learn on the valuation side, what things you need to think about. So I'm attending their this current session, which started I think in Jan. So I dial in via Zoom and basically go through what he's teaching to NYU Stern Business School MBA students. He also runs another class which is called Corporate Finance. If you're interested in that, may attend that as well. He also puts all his lectures on YouTube, so you have no excuse of not learning if you really want to learn the stuff. He's it's fun to listen to him. Also, okay, so I will skip that. Thank you, Jay, for helping Marvin with all his questions around options and IV. Did you buy or sell in stock? I think I already talked about it. I had my buys and sells. Please send link. Is there any cost? Okay, maybe there's something else happening. Okay, I'll skip. Maybe I missed something. What am I miss? Oh, okay. Is there any? Oh, you're asking for the link for the Zoom. I'll give you the link for the Zoom class. Yeah, I have a Zoom link on my in my favorites, and I think we are in session 12 or 13 right now. Yeah, I've been a bad student. Getting back to class after what 25 years is difficult. Well, let me just get you the link. Zoom valuation. It's a copy. Okay. Yeah, this is the professor's Zoom link. This is the NYU Zoom. Right. So I'm sure right now nothing is happening. And he also puts it on a YouTube. If you miss your Zoom, you don't dial in, on the Zoom. This current session, these are the YouTube, because I missed a few of them, then I went and watched it on Zoom. But if you want to attend the live session, that's the Zoom link. Classes happen on Monday and Wednesday from 10:30 a.m. to 11:50 a.m. PST, Monday and Wednesday. I sometimes I see 15, 20 people, 25 people will join in on Zoom. I think most of them are freeloaders. I shouldn't say it because some of them have got a New York Stern name in it. Maybe they are students just attending from dorm or their room, and I'm attending from Bay Area. Yeah, so this is the Zoom link. All right, what else? And yeah, knowledge is available for free. You don't have to pay for the knowledge. So much of a knowledge on internet available for free. I think we just need to have a motivation, which is what more important than, oh, I don't have a content. There's so much of a free content available. All right, so that's it for today, guys. Thank you for joining in, and yeah, it's a fun discussion. Good to be back after a gap of a week. Looks like too long. I miss these, our Saturday discussions around stock and everything else. So if you want to have a continue, chat midweek, I shared the Slack link over there. Yeah, hop in, join in. Like I said, it's not too chatty. I shouldn't say what motivates you to take these sessions. So, I mean, I realized for long that I need to get into investing to become more independent and not be dependent only on my W2 income, right? And so I made my own mistakes. I learned, and then few of my friends started, hey, you are doing these option stuff, etc. 5 years ago during COVID, everyone was investor. So I started with a few of my friends on a Zoom with a Microsoft OneNote, and then I put it on a meetup, and then from there we are. I love talking about investing, and if that helps someone, else in changing their life, everything has paid off. Then I'll consider it as paid off. It's just that I love to talk about investing, right? And because you guys are coming in, you're forcing me to read and to bring us some content. Otherwise, might just slack and say, you know what, I'm not gonna read. I'm not gonna look at what's happening in the market. But now I have to, because this is my only source of income, right? I decided not to go back to the job, but just generate whatever I need from my investing. You're welcome, Cecilia. How about SPY? SPY is the biggest portion of my portfolio, right? At the end of a first session after the end of a previous month, I share what my top holdings in portfolio is. So at the end of February, SPY is still top one. If you're not interested in reading through individual companies, 10Ks, or not interested in following a company, SPY is a great investing tool. There is no shame, right? You don't get bonus extra marks in the stock market for doing complex stuff, right? You can just take it, make it as easy as possible, or you can make your life as complicated as possible when it comes to the stock market. Pick up a few ETFs and live with it. That's fine too. It's a great way to stay invested. I happen to just love reading about businesses, love reading about what's happening in the financial market. So I will invest in individual companies. But if you not, it's SPY, maybe pick QQQ, maybe pick GLD if you want some gold. If you want some emerging market, pick EM. There are ETFs, decent ETFs for every kind of opportunity. Stay with that. SPY is my biggest holding. Ramesh, I love listening to, and I love having you. You've been, I think, one of the pioneers. Been attending it for more than 4.5 years. I think ever since we started this. How do you subscribe? So it's on a meetup, right? If you're on a meetup, I don't have any separate subscription, etc. It's for free. Just join the meetup. If I'm not doing a session, I will cancel it on the meetup. If the session is on the meetup, it means I am conducting the session. What percentage do you think one should put in SPY? SPY. I think, again, I cannot tell you what you would want to do for your portfolio, but SPY means you're going to get a broad market return. Not going to beat the market, because the market is SPY, right? We consider S&P 500 as the market. But it will be less volatile. You're not going to get returns like a tech company's returns, which QQQ will give. But also understand QQQ was down 40% in 2022, whereas SPY is down only 22%. Less volatility, less overall, the return. So you have to figure out what is comfort level for you. And whatever we say 10% average return of stocks over long term, whenever we're talking about so-called market, we generally talk about SPY. Ashwin says, I made the best returns when trading platform blocked me from selling to the compliance issue. yeah. You don't get overexcited or you don't get afraid and then sell it. It's a better way. Let me give you I thought everyone is out here came through the meetup, but if you're not, maybe someone just came in because their friends gave them the link. Let me share the link of the meetup. So this is the meetup, right? If you just join this meetup, every event I conduct through this. And I didn't meet last week, so I canceled that one. But if you're in this, you'll get notification. How to get a copy of your recordings? So recordings are on my website. Oh, damn, I closed that one. Okay, so let me just open that again. I'll show you where the recording is. Again, you don't have to pay anything, right? For the recording. You may just have to register for free. I just don't want any bots, etc., coming and bringing down the website. I don't do much on this side anyway. So yeah, so we have it generally by the end of Monday. I'll probably upload it, but I will put a notification on the meetup saying, hey, the recording is up, and I'll share the link. Yeah, so if you have missed some of the sessions, the recording is right here. Okay, I share the link. Naked put. Okay, so now we're talking about. So Marvin, what might help you is if you're new to options, I think these discussions are never helpful. Go to the education side. The most recent bootcamp that I did, I have all the recordings out here. Very basic intro. Here I talk about short put, how you should use, if you have a smaller account, create a spread, call options, covered call, monthly income. Then here's a small accounts. Right? That's where we'll talk about how you said naked put is unlimited. No, you can actually limit $1,000 as maximum risk, $2,000, $500. You can create a spread if you have a smaller accounts, right? So you can do all this thing out here. And then you can move to the more intermediate level, talking about, assignment risk, multi-legged, right? With how to manage your trades. I will throw up terms like iron, condor, back ratio, spread, and blah, blah, strangles, and all that I have covered here. And then more advanced one is delta hedging. We talked about, right, how to hedge your portfolio. There's nothing rocket science. I've talked about all of that. So if you're new, maybe it'll help for you to go through it so that you're familiar with the terms, then bring up the questions. Cool. Alrighty. My gosh, we're like 40 minutes over, but let's stop right here. And thank you everyone for joining in. I'll talk to you again next week. Until then, goodbye. And let's see what this week brings to us with this new administration. It's always fun, right? There's never a dull week. Bye, everyone.